Meeting webinar. Yeah. So, good evening, everybody. Welcome to yet another important study circle webinar organized by our IDT committee of CTC. Friend, the CTC have been doing these webinars as well as the seminar regularly for the benefit of member and selecting the appropriate subject or topic from time and again. And we are fortunate that we are able to garner the best of the faculties of this country, best of the brains for addressing to the respective study circle meeting. Today, yet another young dynamic advocate, Uchit Sheth, sir, which is from Gujarat. Friends, there are two important judgments we have selected for the today's session. One is a landmark judgment recently we had pronounced by Honorable Gujarat High Court. That is in the case of Gujarat Chamber of Commerce and Industry, and that was on the applicability of GST on the assignment of leasehold right. It's a very hot topic, and I'm sure many of you must be facing a litigation on this issue at one or other forum. And the in absence of a tribunal as on today, we have as far as GST is concerned, we are lacking the precedents. In the service tax regime, the transactions or the taxability may not be on a same footing, considering the term being widely defined in GST. Service means anything other than goods. How much we can stretch that our faculty will explain whether immovable property is a service, whether leasing right, assignment of lease is a service or no, that irrespective of the decision which has come from Gujarat High Court. Secondly, we have already a decision in past by Mumbai High Court, and recently also one matter being remanded just 3-4 days back. So all those we have requested the faculty to take us through. This is about the first decision. The second is about the Senvet credit of the Bharati Airtel, which was in the old regime of service tax, and on the applicability or eligibility of Senvet credit on the telecommunication tower. This is yet another very, very important because we have a safari retreat under the old regime where Supreme Court has decided, and this is going to be a burning issue and going to be a tug of war in the time to come. So, considering the importance of both the topics, we have requested our faculty to take us through both these decisions. For the information of members, I'm sure those who have read the decision, Mr. Uchit Sheth, advocate, was one of the counsel who has argued this matter in a group taken up before Gujarat High Court in the case of Gujarat Chamber. So we will get a lot of things which is not written in the judgment. And he has circulated a very interesting and important gist for the benefit of member, which our chamber has already forwarded by email for your reference. Without wasting much of the time, first of all, thanks to Uchit Sheth, sir, for readily accepting our request. At a very short notice, you have given your confirmation. Originally, his talk was scheduled on Monday, but being a lawyer practicing on High Court and Supreme Court level, you know how the life is, and it is so uncertain because they have to ensure that they attend to the matters on a date which are announced at a very short notice. And for this reason, yesterday he had a matter before Supreme Court. Therefore, he has requested, and we are really thankful that he said any day suitable to you, I am ready and available. Even he was ready for yesterday, but he was at Delhi. So we thought it appropriate that let us give a proper decorum and time to this thing, and that's why this was rescheduled for today. So we are thankful to Uchit sir. Welcome, sir, on this platform. I'll now request my convener Raj to introduce our today's faculty. Thank you. Over to Raj.
Thank you, Rajiv sir. I have the pleasant task of introducing the speaker for today's webinar. It is my great pleasure that I am introducing Mr. Uchit Sheth, advocate. He's the Uchit speaker for the topic, I would say. He is a highly accomplished legal professional with an impressive academic and professional background. He holds a bachelor's degree. He's a CA, LLB, and he's a gold medalist, having a 14th rank, All India 14th rank is the CA examination, final examination. His professional journey includes serving as a junior to the esteemed senior advocate V. Sridharan at the Bombay High Court, and he currently practices in the Gujarat High Court, Supreme Court, and various tribunals, with a focus on taxation matters along with Mr. Nayan Sheth in Ahmedabad. Mr. Uchit Sheth has been involved in several high-profile cases contributing to the jurisprudence under GST. all the important rulings which we receive, which we hear about from the Gujarat High Court, most of the cases are argued by him. Like the Philco Trade Center case, which struck down the constitutional validity of Clause 4 of Section 140, Subsection 3 of the CGST Act, Tractors and Farmers Equipment Limited, which struck down the levy of entry tax on tractors as violating Article 304A of the Constitution. West Coast Water-Based Private Limited, judgment of Reliance Industries under for revision notices issued under Section 75 of the Gujarat Value-Added Tax. Torrent Power judgment, wherein para 4.1 of the circular issued by CBIC under GST Act and summons issued on the basis of such circular squashed on the ground of a circular being contrary to legal provisions. Munjal Manishbhai Bhatt on the notification prescribing 1/3 mandatory deduction, which was struck down as ultra vires to the Act as well as Constitution. So many judgments which we wherein we see a ray of hope, or there is some kind of a favorable ruling. I think many of the judgments have been argued by him. He has been awarded the best paper writer in the sales tax journal published by the Gujarat Sales Tax Bar Association for the year 2013-14, 14-15, and best column writer for the year 15-16. He gave his services as the editor of the Sales Tax Journal for the many years, 17, 18, 18, 19, 19, 20, 20, 21. He has delivered lectures and presented papers on sales tax, VAT, GST at seminars and refresher courses conducted by different associations as well as by the ICI, and participated as a trustee of brain trust sessions in various seminars. We are extremely fortunate to have Mr. Sheth with us today, and I'm confident that his insights will add a lot of value to all of us present here. So without further ado, I would request Advocate Uchit Sheth to please take over the proceedings of the session. Thank you, sir. And thank you for accepting our invitation and coming on this chamber platform to share your knowledge. Thank you, sir.
Yeah. Before Mr. Sheth commences, one request. The topic is very interesting, important. I am sure this being a webinar, many of the participants have a lot of issues, questions, cross questions, etc. Considering the decorum, what I request is our conveners will be keeping a watch on a chat box, and you can text your issues in chat box only. You will not be allowed to speak directly. The conveners will ask those questions at appropriate time to the faculty of the day from the chat box to avoid the duplication and timely this thing. If time permit, towards the end, if any other question left out and if our faculty is available, we will take advantage at the end. But otherwise, till then, you should keep writing your question in chat box only. Thank you very much, Uchit sir. Platform is yours. Thank you.
Good evening, organizers of this webinar, the office bearers of CTC, and all the delegates who are present online. First of all, let me start by again thanking the organization. It was a last minute request from my end to shift from Monday to Tuesday, and I'm grateful that that was immediately accepted by Rajiv ji and the other organizers. And now, coming to the topic, the topic as such is analysis of two judgments, one judgment by the Gujarat High Court and another by the Supreme Court. I will start with the judgment of Gujarat High Court. And apart from analyzing the judgment, because as such its implication will be in the context of leasehold rights, but we will also during the course of the session try to see what can be the other incidental issues which may arise as a result of the judgment, because ordinarily a judgment would resolve a dispute, but we have seen in the past that it would also give rise to new issues. So we as tax professionals need to be aware about both the aspects of the matter. So now, insofar as the first judgment is concerned, let us first start with examining why this dispute arose. GST as a law has evolved from the earlier sales tax, value added tax, excise, and service tax regimes. What the legislature has tried to do is to widen the scope of the law to the maximum possible extent. Earlier, there used to be very restricted definitions of sale, supply, service, manufacture, etc., etc. So there would always be scope for the SSE to say that, look, this activity is not a sale of goods, therefore you cannot tax it. It led to constitutional amendments. The 46th Amendment was made. This the definition of sale was expanded, and eventually the law progressed. When they came up with this GST regime, what they tried to do was that, at least in the Constitution, they defined the terms goods and services in the widest possible manner. Services in the Constitution itself is defined to mean anything other than goods. When the Parliament sat to enact the Act, Parliament also copied the very same definition of services, and it said that anything other than goods is a service. So while goods has a slightly proper statutory definition to include any movable property, which is similar to the definition which was there in under the earlier laws, the scope of definition of service has been made extremely wide. This is the base for the dispute which arose in Gujarat as well as in other states. The transaction in question, as we are aware, is a case of a land being allotted by a state industrial corporation such as GIDC, or in Maharashtra it is the MIDC. And if the lessee transfers those rights to another party for a consideration, the question which arose was whether that consideration is taxable under the GST Act or not. The common understanding of most of these SSEs was that since it is only transfer of leasehold land, the assignment deed also attracts stamp duty. So it is as such a transaction of immovable property which is not subject matter of tax under the GST Act, and therefore the common understanding was that GST is not payable. However, as I said, the problem arose because there is no specific exclusion for sale of immovable property or transfer of immovable property from the purview of GST under any provision. The nearest clause which we can find, which can help us in excluding this transaction, is entry 5 of Schedule 3, which says sale of land and building subject to Schedule 2. So the moot question before the court was whether permanent assignment of leasehold rights by one party to another can get excluded from the purview of GST Act because of entry 5 of Schedule 3, which refers to sale of land. In other words, can sale of land be equated with also transfer of an immovable property? For this purpose, first, it was required to be determined whether these rights constitute immovable property at all. And secondly, even if they are immovable property, whether this can be termed as sale of land, because sale of land, as we commonly understand, is simpliciter sale of land, lock, stock and barrel, where I own the land and as an owner of land, I transfer that land. That transaction admittedly does not attract GST. So this was the reason for the origin of this dispute in different states of the country. Now, one essential difference which is required to be kept in mind while analyzing the judgment, its implication as well as the dispute in question, is the difference between a lease and assignment of leasehold rights. There have been queries after this judgment has been delivered from various forums that whether on the basis of this judgment, can we also claim that the grant of a long-term lease itself is not taxable under the GST law? Here, according to me, the judgment makes it very clear, and even otherwise, if we look at the definition of supply, it specifically includes lease. Now, there is no clarification in the provision as to whether this is short-term lease, long-term lease, etc. So, when the supply definition includes lease, according to me, there cannot be a doubt that grant of lease, whether short-term or long-term, would get covered under the purview of GST. Because leaving aside all the interpretations, etc., plain literal reading of the provision, if lease is included, then it becomes taxable unless that provision itself is struck down by some court. So on interpretation of the provision, it is very clear that grant of lease is included within the scope of supply, and this is also there as an observation by the High Court in its judgment. So this judgment has nothing to do insofar as the taxability of long-term, the grant of long-term lease is concerned. Therefore, the grant of lease by MIDC or GIDC to an SSE is otherwise a taxable supply. It is only because of an exemption which is granted under the exemption notification number 12 that first transaction of grant of lease is not considered to be taxable, or it is exempt from tax. However, if suppose the lessee subleases that land to someone else, sublease is also a form of grant of lease. If it is a sublease where the lessee continues to have rights in the land, it only sublets the rights to someone else, that transaction will still continue to be taxable and is not affected by this judgment at all. So this judgment, the scope and applicability is limited to deciding whether assignment of leasehold rights by one party to another, or if I substitute the word assignment with sale of leasehold rights by one party to another, whether that is taxable or not, the scope is restricted to that particular transaction only and not to grant of lease or to sublease. In fact, during the course of arguments, it was practically conceded by all advocates that we are not saying that grant of lease or sublease is not taxable. We are only saying that assignment of leasehold rights is outside the purview of GST. Now, on what basis do we make this distinction? First, as I pointed out, Section 7 itself specifically includes lease. Second, when we say that assignment of leasehold rights is not within the purview of GST, we rely on entry 5 of Schedule 3. Now, entry 5 of Schedule 3 talks about sale of land. Now, eventually we'll go there that how court has linked land with immovable property. It has eventually been held by the High Court that when the legislature says land, it actually meant transfer of any immovable property. However, the essential condition is that there should be sale of that immovable property. In a case of assignment of leasehold rights, there is a sale in the sense that all the rights that the lessee has in the land are transferred to someone else. In case of grant of lease or sublease, the reversionary right or interest in the property is retained by the person who is granting the lease or sublease. So it is not sale, because sale essentially requires that I go out of that property, lock, stock and barrel. I do not have any interest in that property anymore after I enter into that assignment deed. So sale of immovable property can be fructified only if I get out of that property. In case of a lease or a sublease transaction, that would not happen. Therefore, entry 5 would simply not apply. And hence, there is no question of this judgment, or for that matter, as a matter of principle, to say that lease or sublease is also not a taxable supply is not likely to be accepted by the court. Now we move on to the thought process or the decision-making process of the judgment. What the High Court said was that let us not look at the GST law in vacuum. This is not as if it is a new law or a new tax which has been imposed without any background. Services were taxable even earlier. They were taxable under the Finance Act, and the tax was called service tax. Now, if we look at the definition of service under the Finance Act, it specifically excluded any transaction of transfer of title in immovable property from the scope of service. Further, there used to be a controversy. It is still pending before the Supreme Court, but there used to be a controversy regarding transfer of development rights in land, where the CSTAT in the case of DLF took a view that this is a transaction of transfer of immovable property and therefore service tax would not be imposed. All this was taken into consideration by the High Court while tracing the legislative history of the issue. So High Court basically linked this definition of service and exclusion of transfer of title in immovable property to entry 5 of Schedule 3 in order to come to a conclusion that any form of transfer of immovable property is not envisaged to be taxed under the GST law. Now again, ordinarily, the principle of interpretation would be that if different words are used in two different statutes, then ordinarily you cannot simply say that earlier this was the interpretation, therefore that same would apply to the new law or the other law. However, what the High Court has done is that apart from saying that look, this is not a new law, it is as such a repeal of the earlier law and the enactment of a new law. Secondly, the High Court has also gone through the statement of objects and reasons of the GST bill to further support its observation. Now, if we look at the statement of objects and reasons of the bill, it clearly says that it is being introduced with the object of subsuming the earlier taxes. Further, also to avoid cascading effect of taxes, etc. So that is one document which is relied upon by the High Court in further support of its observation that the object is not to levy a new tax but to replace the old tax. Therefore, the earlier definition of service as well as the jurisprudence in respect of that definition should be taken into consideration. For this purpose, the High Court also relies upon its earlier judgment in the case of Munjal Manish Bhai Bhatt. Now, in Munjal Manish Bhai Bhatt, the question was whether this 1/3 deduction towards land, which is given in case of construction service, whether that is valid or not. Now, multiple arguments were raised to say that once under sale of land is excluded, then delegated legislation by way of a notification cannot deem 1/3 only as the value of land. If I am able to establish that the higher value is attributable towards land, then that entire deduction needs to be given to me. Now, again, for making this point before the High Court in Munjal Bhatt, one of the arguments made and accepted by the High Court was that eventually what the object of the law was to tax the construction service portion of the transaction. The High Court observed that the object of GST is not to replace the entire basis of the old laws and the judgments laid down in the context of old law. The object is only a furtherance of those laws and replacing them by a uniform GST law. And therefore, the earlier jurisprudence, earlier provisions need to be looked at. So that was again taken into consideration by the High Court, even in the case of Gujarat Chamber. Third, more and very important, the High Court took note of the agenda to the 5th GST Council meeting and the minutes of the 7th GST Council meeting. Now, interestingly, when the GST Act was being finalized, proposal was made in the agenda to the 5th Council meeting that why not tax immovable property as well. It was a detailed agenda where the author of the agenda said, which would obviously be on the basis of discussion with the interested parties, that there is no constitutional embargo against imposition of GST on immovable property. So even if GST is imposed on sale of land, simpliciter sale of land, still the framers of the agenda felt that that law would sustain. There is nothing in law to prohibit such imposition. They again referred to the wide definition of service given under the Constitution for this proposition. This agenda was put up for discussion. In the 7th meeting, the Council noted that while there may not be any embargo, however, the fact is that a transaction of immovable property does attract stamp duty. Stamp duty is not subsumed in GST. So some states felt that it would not be in the interest of the general public that two taxes are imposed on the very same transaction. Considering the objections made by some states, eventually the Council decided to defer the issue. Hence, there was discussion for taxing even transactions in immovable property. However, after due deliberation, that was those discussions, that decision was deferred. Now, it is interesting to note there in the minutes of the meeting, agenda, etc., everywhere what was mentioned was immovable property. It was not in the context of land. What was mentioned was immovable property, and a proposal made for taxing a sale of immovable property was eventually deferred. So this was also one of the important aspects which was argued as well as taken into consideration by the High Court in again supporting that earlier proposition that please do not look at the definition of goods and services independently without taking into consideration the background and the history of the GST law. So we get three things now in support of this proposition. First, the definition of service under the Finance Act. Second, the statement of objects and reasons of introducing the GST bill, which is again supported by the judgment of Gujarat High Court in the case of Munjal Bhatt. And third, the minutes of the GST Council meeting deferring the decision to impose GST on immovable property. So this was how the exclusion of immovable property, which was specifically there under the Finance Act, got linked with entry 5 of Schedule 3 of the GST Act. Now, before we go further, why and how this was different from something which was argued before the Bombay High Court in the case of Builders Association, which the judgment also came to be affirmed by the Supreme Court. In the case of Builders Association, Bombay High Court, to my understanding, went only by Section 7 as it then stood, read with Schedule 2, which said that any lease, any type of lease will be included in the definition of supply, to form an opinion that a lease transaction is taxable. So first, this fine distinction between a grant of lease and assignment of leasehold rights was never put up or never considered by the Bombay High Court in that judgment. Second, the judgment was at the point of time where Section 7, by way of a deeming fiction, included all transactions as mentioned in Schedule 2 and deemed them to be a supply. Now, after that judgment, Section 7 came to be retrospectively amended right from 1st of July 2017. And now the law as it stands is that for the purpose of deciding whether a transaction is supply or not, Schedule 2 is irrelevant. Schedule 2 comes into the picture only when you have to decide whether that transaction is a supply of goods or a service. Whether it is a supply or not, you go by the definition of supply. Once you reach to a conclusion that it is a supply, then you go to Schedule 2 if there is a doubt whether it is a transaction of supply of goods or services. So the role of Schedule 2 has been restricted, and therefore, although this Bombay High Court judgment was relied upon by the advocate for the department before the Gujarat High Court also, Gujarat High Court decided to independently take a view because, firstly, as I said, this grant of lease, assignment of leasehold rights was at least not coming out from the judgment that was taken into consideration by the Bombay High Court. And secondly, the law had changed after the Bombay High Court delivered the judgment. Now, after considering the legislative history of the definition of service, another aspect which was taken into consideration by the Gujarat High Court was the different connotations of the term property. Now, why this was relevant? As I said, when entry 5 of Schedule 3 said sale of land, the first challenge was that whether land can be equated with immovable property or not. Second challenge was, even if it includes immovable property, whether sale of a right in immovable property can be considered as sale of immovable property or not. So the first challenge of bridging land with immovable property could be met with on the basis of the legislative history, council minutes, etc. The second challenge, for the purpose of dealing with this, the High Court took note of the fact that even in legal dictionaries and the literature, property is defined depending on the context on which it is used. To give an example, suppose I own a mobile phone. That phone itself is a property. Or say, suppose I own a house. That house itself is my property. So when we say that this is a property, we refer to that very object. Second context in which property can be used is my right in a particular object. So even though I may not be owning it, I still have a right in it, and therefore it is property. When we say intellectual property rights, it is not property as we commonly understand that the object, it is not an object, it is a right. So High Court took note of this particular aspect of the term property. It relied on corpus juris securum, which is a secundum, which is a law book for this proposition. And it came to a conclusion that in legal parlance, property can be used to designate right of ownership in the property, aggregate of right to possess, use, enjoy, dispose of a thing, and exclude everyone else from interfering in that right. So it can also be viewed as a collection of rights. Therefore, the conclusion which was drawn was that immovable property would also include interest in immovable property or right in immovable property. In other words, or to turn it around, a right in immovable property would also be an immovable property. So when I use this sentence, the first immovable property is the object itself, the land. But the right in land, which is also a property, the nature of that property would also be immovable. So this was in fact argued at length. There was also reference made to the Transfer of Property Act, the definitions, etc. And eventually, the court came to a conclusion that therefore, sale of land first would be akin to a sale of immovable property, and secondly, sale of land should also include sale of interest in land. So even if I have a right in land and if I sell off that right, still that would be excluded from the purview of GST. Another argument which was made and which has also been accepted is that these rights constituted profite pendre. Profite pendre is basically what we generally understand as benefits arising out of land. Now, if you look at the classical the classical law dictionaries on defining such terms, profite pendre was classically understood as the rights in the natural resources which are arising out of land. So suppose I enter into a contract with a farmer that every year he has to cut the crops and the crops are to be transferred to me. That contract would be termed as a contract for sale of profite pendre. So the benefit which is arising out of land, which is say the crop or the trees or the soil or minerals, these sort of things would ordinarily constitute what is called a profite pendre. However, in Indian jurisprudence, there have been judgments in the past where even other rights which are fastened to land have been considered to be profite pendre. One judgment which was relied upon was in the case of Anand Behra, where again rights attached to land were considered to be profite pendre, of course in a different context. Another judgment, Titagar paper mills, where this concept was analyzed by the Supreme Court in detail. Gujarat High Court said that forget vacant land, there are also cases where on land building is already constructed and that entire building with the land is transferred by the SSE. The land is leasehold, the building is owned and both are transferred. High Court took a view that this would constitute profit ependre, a benefit arising out of land, and as such there cannot be dispute that land would include benefit arising out of land. I may clarify that this is different from interest in land. The right in land and benefit arising out of land would be slightly different. Profit ependre is more to do with benefits which arise out of land. And if that is transferred, that would also be sale of immovable property or sale of land and cannot be taxed. So High Court relied upon this concept of profit ependre to say that in any case, if it is sale of leasehold rights, if it is a bundle of sale of leasehold rights coupled with the building thereon, then this contract, that consolidated contract, would constitute a contract of profit ependre and which would again be outside the purview of GST Act. So now, considering all these aspects, effectively what the High Court has done is that it has quashed and set aside all the show cause notices and orders which were passed for imposing GST on assignment of leasehold rights. A request was made by the Advocate General for staying of the judgment, but which has been rejected by the High Court. Now let us come to certain peripheral issues which would arise as a result of this judgment. Insofar as Gujarat is concerned, there cannot be a doubt because Gujarat High Court is the jurisdictional High Court. It would bind all the citizens as well as all the officers in Gujarat. So for now, the Gujarat authorities cannot raise a demand insofar as this transaction is concerned. Even if suppose the issue is getting time barred, they need to issue a notice. They can issue a notice, but then they are required to drop that show cause notice and thereafter carry it forward in appeal if they are wanting to await the outcome of any appeal preferred by the department against this judgment. So in other words, authority sitting in Gujarat cannot pass an order which is contrary to the judgment of a binding decision. This is something which is important even otherwise, because what we find practically is that in most cases where the department is in further appeal before a judgment in another case, or it is wanting to file an appeal, then for other periods, other SSEs, what the department would do is that it would keep raising the demands and tell the SSE to go in appeal. That is absolutely not the correct procedure to be followed. In Kamlakshi, the Supreme Court, followed by number of other decisions, it has been made very clear. In Kamlakshi, Supreme Court observed that you cannot, as a department, make an observation that that decision has not been accepted by you or it is not acceptable to you. Once a judgment is delivered, you have to accept that judgment. The fact that you have filed an appeal against that judgment is a different matter. If suppose that judgment gets overturned, obviously you can thereafter take benefit of it. But you cannot raise a demand by saying that you have not accepted that judgment. So that principle would apply. So even if a show cause notice is issued proposing to demand tax on a transaction of assignment of leasehold rights in Gujarat, that show cause notice will have to be dropped in view of the High Court judgment. Thereafter, Section 107 gives department also the right to file appeal. Department can file appeal against that order dropping the proceedings and it can take the matter further. Second aspect is the impact of such a judgment on other jurisdictions. Now, interestingly, many of you would be aware that while Article 141 of the Constitution declares that the law of the Supreme Court, the law laid down by the Supreme Court is binding on all other courts, there is no similar article in the Constitution insofar as a High Court judgment is concerned. originally, after Constitution came into force, this issue was then taken up by the Supreme Court. Supreme Court said that even though there may not be a specific article to that effect, principally, based on the doctrine of binding precedent, a High Court judgment would bind the authorities and citizens of that state. So, while there is no specific article, judge-made law is that the High Court judgment binds within its territory. Now, what happens to SSEs outside the territory, particularly in the case of a central legislation? Because the law is the same across the country, and therefore, question is whether Gujarat High Court would bind the other officers also. Answer would be no. It cannot bind. However, it does have persuasive value, and there are judgments of various tribunals, high courts taking a view that ordinarily, in the case of a central legislation, if there is no contrary decision of any other court, then the officer should follow the judgment of the other high court. However, this is again a principle which is not strictly saying it is binding, but it says that it should ordinarily be followed. This is different from a case where a provision is struck down by a high court. Now, again, what is ordinarily understood is that even in that case, the judgment would bind only in that state. That may not be true. If you look at the decision of Supreme Court in the case of Kusum ingots, I have given the citation in the slide. Supreme Court takes a view that High Court under Article 226 subclause 2 has the power. This was in fact introduced subsequently. High Court has been given the power to issue writs even if part cause of action arises in that state. And therefore, it is observed that if suppose a law is struck down by a particular high court, then it would be considered as struck down for the entire country. It cannot be that the high court, even though it is a competent court, and it strikes down a particular piece of legislation, still its effect would be restricted only to that particular state. It cannot be that the declaration of invalidity is only for one state and not for the other states. So suppose say in Rule 9610 matters, where Kerala High Court has struck down Rule 9610, an argument can be made that once a competent High Court has struck down a particular rule or a particular provision, that would apply even to other states also. Ordinarily, this is an academic discussion because once a High Court delivers a judgment, either the department would accept that judgment, in which case there would not be litigation in other states, or it would go to the Supreme Court. Now, if it goes to the Supreme Court and effectively once the Supreme Court decides, it would obviously bind all. So it is an academic discussion in a sense, but for this interregnum period where there is a judgment of the High Court, of one High Court, and suppose it is challenged before the Supreme Court, till the Supreme Court decides what is the correct legal position, that we should be aware of. Another practical question which arises is that even after the judgment, whether the supplier can still collect tax on such a transaction. Now, if you look at section 31 of the GST Act, it says that tax invoice is to be issued in the case of taxable supply. Now, in Gujarat, once the Gujarat High Court has taken a view that this is not a supply at all, strictly speaking, issuance of a tax invoice for a transaction of assignment of leasehold rights would be illegal, because I am collecting tax in respect of a transaction which has already been held to be not taxable by a court. However, again, this is the legal part of it. Ordinarily, if suppose the matter it is expected that in due course this matter would travel to the Supreme Court. Ordinarily, practically, if the SSE feels that because the matter is sub judice before the Supreme Court, it wants to protect its interest, and therefore it collects tax and pays it under protest, then ordinarily the department will not raise an objection, because department will also know that this is a matter which is still sub judice and the payment which is made is is under protest. But that documentation we need to be careful about. We should not simpliciter just issue a tax invoice and pay up the tax. At least an intimation needs to be given to the department that this is why we are paying, because the matter is still at large before the Supreme Court. Now, this is again an important question. While the Gujarat High Court quashed the show cause notices and orders which were passed for demanding the GST on these transactions, question is that what if I have already paid? Can I seek refund of tax which is already paid in respect of assignment of leasehold rights? Answer is yes, you can claim refund, subject to fulfillment of section 54. Now, two important conditions of section 54 we need to keep in mind. First is the time limit. 54 gives a time limit of 2 years from the relevant date for filing of refund application. Suppose the transaction is of the year 17-18. We have already collected and paid. We have not filed any refund application. We have not litigated on the matter. There it will be difficult to say that even though you have accepted the liability, paid off the liability without any protest, still you should be entitled to refund. That would be a difficult proposition. Mafatlal, the 9-judge bench decision of the Supreme Court, is a well-known judgment. It was argued before the Supreme Court in that case that if an erroneous payment is made of tax, then that needs to be refunded, because retention of such tax would be without authority of law and therefore violating Article 265 of the Constitution. Article 265 says that no tax shall be retained by the state or levied by the state without authority of law. This argument was specifically rejected in Mafatlal by the Supreme Court by observing that even the provision which enacts a time limit for filing of refund application is also what we understand as law. So if a refund application is rejected as time barred, even though on merits you are required to be granted refund, still it cannot be said that this is illegal retention by the state. So according to me, section 54 time limit will apply to this case. When the time limit cannot apply or should not apply, there are exceptions. In Mafatlal itself, one of the exceptions was where a statutory provision is struck down by a court. Say ocean freight, Mohit Minerals. In Gujarat High Court, petition after petition was filed seeking refund of the IGST paid on ocean freight. And all those petitions have been allowed by the High Court, irrespective of the time limit, whether the application was made in time or not, etc., etc. That was for the reason that the notification imposing the IGST on ocean freight was struck down by the High Court, confirmed by the Supreme Court. So Mafatlal says that in such a case, your refund application is not arising out of the law. It is not arising out of the GST Act. The Act never envisaged giving refund based on one of its own provisions being struck down. Therefore, Mafatlal says that in such a case, you can claim refund either by filing a suit or by filing a writ petition. So same with 9610. Suppose tomorrow Rule 9610 validity is struck down and it's already struck down by the Kerala High Court. Suppose it gets confirmed by the Supreme Court. On that basis, if we claim refund of some amounts which we have already paid, perhaps we can give a go by to this time limit of 2 years. However, in the present case of Gujarat Chamber, the issue was not regarding validity of any provision. It was only a matter of interpretation. Matter of interpretation as to whether this transaction is a taxable supply or not. Once it is a matter of interpretation, and if we have accepted that liability in our returns shown, collected, paid, etc., then if we do not file the application within the stipulated period of 2 years, then we have to forget about it. Again, this I am talking about transactions which are declared in the returns and tax paid without protest, no application. If there are other factual scenarios involved, say suppose it is not declared in the returns, but we have paid through DRC3, or suppose it was recovered during search, some other facts are involved, then it would be a different question. Then we can take a plea that this was not something which was admitted by me. It was only in where recently Gujarat High Court in the context of another issue has taken a view that if the payment was through DRC3, it was only in the nature of deposit. Therefore, this time limit does not apply. So if other factual scenarios are involved, then this time limit of 2 years can be considered. But if it is simpliciter, accepting the transaction in returns, paying the tax and not filing within a refund application within 2 years, then we are not entitled to refund. Second limitation which we need to be conscious about is the limitation of unjust enrichment. Now, unjust enrichment as a principle applies whether or not there is a specific provision in this regard or not. In GST, there is a specific provision to this effect in section 54 that we need to establish that we have not passed on the burden of tax to anyone else in order to claim any sort of refund. Now, so there are many cases where the supplier has already collected and paid. If he has collected and paid, then he cannot claim any refund of that tax which is already paid. However, if the recipient has borne the burden of the tax in the sense he is the end user, he has not further assigned to anyone else, not passed on the burden to anyone else, then it may be open for the recipient to claim the refund, particularly because that we will come to a bit later. There is already a dispute regarding admissibility of input tax credit in respect of such a transaction. So suppose input tax credit is being disputed or it is not available, then the recipient can consider filing an application for refund. But insofar as the supplier is concerned, he will not be able to file a refund application if he has already collected the tax. Now, this is again a hypothetical issue, but because we are dealing with all aspects of the matter, I have just raised it. Because it also keeps happening in multiple issues. What if tomorrow the government files an appeal against this judgment of the High Court and the operation of the judgment is stayed by the Supreme Court? Now, again, the misconception on the part of many of the authorities is that once a High Court judgment gets stayed, they are not bound to now follow that judgment. That is completely a misconception. Now it is well settled that the stay is only binding between the parties who are there before the court. So suppose High Court has allowed a petition and directed granting of refund, and the operation of judgment is stayed by the Supreme Court, then the department is not bound to give that refund to that assessee. The stay of operation of the judgment does not mean that the judgment ceases to be binding. So even if a High Court judgment is stayed, it still binds the officers as well as the court itself. And therefore, even if there is a stay, still demand cannot be raised on the ground of such stay. Now here, one judgment of Supreme Court, Sri Chamundi Mopeds Limited, that is important because here this aspect is considered in detail. Supreme Court takes a view that stay of judgment does not mean that the judgment itself is effaced. It is not as if the judgment ceases to exist. The stay is limited to the rights of the parties litigating that particular matter, and it has no bearing whatsoever insofar as the binding nature of the judgment is concerned. Same was recently considered by the Delhi High Court in the case of Space Telelink, where it followed another High Court judgment, even though that judgment had been stayed by the Supreme Court. High Court said, we are not concerned whether it is stayed or not, we are following that judgment. Another offshoot, as I had indicated, what if a seller has already collected and paid the tax in respect of this assignment of leasehold rights, and the time limit for claiming refund application, etc. is over? Whether the recipient is entitled to input tax credit in respect of this tax or not. Now, firstly, this issue has not been dealt with by the Gujarat High Court. It specifically notes that once we are holding that this transaction is not taxable at all, there is no question of us going into the issue of admissibility of input tax credit. So this issue is not considered or dealt with by the High Court. So independently, it needs to be analyzed. According to me, if suppose tax is collected and paid, then the recipient is entitled to input tax credit. The objection which the department takes, then there are a few advance rulings also on this issue, is that because you are taking land or taking rights in land and you are going to construct a factory building on that land, the input service is used in the construction of immovable property, and therefore by virtue of clause C and D of section 17(5), you are not entitled to input tax. According to me, this reasoning of the multiple advance ruling authorities is fallacious. When 17(5) C and D debars credit in respect of goods and services used in construction of immovable property, what it means is the actual construction. Merely because I have taken land on lease and the construction is happening on that leasehold land, that does not mean that that inward supply is being used in construction. I am using that inward supply only for in the course or furtherance of my business. Merely because something is being constructed on that land cannot mean or should not mean that it is used in construction of immovable property. Another way of looking at it is, so what if I have the land, the building is already there on the land. Suppose the land is leasehold, building is freehold, both are transferred to someone else and tax is collected and paid. I am not going to construct anything on that land, or I have not purchased it with the intention of construction. Then there would be no scope for arguing for the department that 17(5) C and D are applicable. If there is no scope in such a circumstance, then according to me, that same analogy should apply even in case of vacant land, and irrespective of whether this transaction is taxable or not, according to me, input tax credit should be admissible. So this concludes the analysis of the first judgment. Now I was told that before we analyze the second judgment, I should be dealing with some questions regarding this part of the session. So Rajivji, that is how we should be going ahead, or should I move on to the second judgment?
No, Uchit bhai, our Vice Chairman Keval is keeping track. There are quite a few issues related to your first analysis. So I'll request Keval to consider or take up one by one, and let us close this first, and then you can proceed for second.
Sure, sure.
Keval, you are there, no?
Yeah, thank you, Raju bhai. So, Uchit bhai, primarily, as you rightly pointed out, it's assignment of leasehold right. Now, one of the most prominent question which is there in the chat box, how are we going to deal with other rights which are a part of land, typically a development right, or let's say a tenancy right in an immovable property, which we call it as a pagdi system, or a TDR. Will this judgment equally apply to all these types of rights, or it's going to be very specific?
No, so according to me, the moment we satisfy the criteria of assignment of a right in immovable property, that may be leasehold right, that may be development right, other rights. But the moment we satisfy the criteria of assignment of any right in property, the benefit of this judgment should be available. In fact, if we look at the fine text of the judgment, as I had also indicated, in fact, the High Court relies upon the earlier jurisprudence on development rights. So it takes note of the fact that under the earlier law, even transfer of development rights was held to be not taxable on the ground that it is transfer of immovable property. So in that sense, the nature of the right may not be relevant. It may be, but if it is a right in land and if that is transferred to someone else, then according to me, this judgment should apply.
So it's more to say that when there is an absolute transfer, where everything is what that you have is kind of given away, then definitely this judgment would apply.
Right, right. No, so that I'm very clear. If suppose it is not an absolute transfer, it is only in the sense of parting with some of the rights while retaining the basic right in the property, then that would not qualify within that criteria of sale of a right in that sense. That is something which has been noted also. Firstly, it is noted in the context of lease by the High Court by saying that, look, lease is specifically included in the definition. So there is no question of you taking a plea that lease is not taxable. But that, according to me, would also apply to such other situations also. To say that I only am parting some rights and that is also sale of rights may be taken as an argument, but that would be difficult to achieve. So that is primarily what I feel, that even this was difficult. It is not as if this we have got by throw of the dice. It was very difficult to convince the court that how you draw this link between sale of land and transfer of right in land, etc. But then to stretch it further would according to me be a difficult proposition.
Sir, how would you look at TDR? Will that be given a similar treatment, or it will be completely different from this?
No, as I said, TDR, sale of TDR should receive a similar treatment. So may it be TDR, may it be FSI, all those sorts of rights, which are absolute rights in land, and those rights are sold to someone else, then for the moment, at least this judgment should apply.
Sir, you also talked about the refund part of it. Of course, you said Mafatlal will apply and 2 year limitation will apply. But what I rightly understood, if the tax is paid under protest, then clearly 2 year is not a criteria.
As I said, if there are other factual scenarios, if it is under protest, if DRC3 is there, etc., then it is a different matter. Then we can take pleas that day in, day out, even for people who have admitted in their return, still they take this plea that 54 is not applicable. So arguing before the court is a different matter, but strictly legally, according to me, I see in the chat box someone says that it is only an amount, not a tax. But strictly legally, this argument was taken before the Supreme Court in Mafatlal, rejected by Mafatlal. That the moment you have paid a particular tax under the act and you need to take it back, the moment I declare it in returns, I cannot say it is I am declaring an amount in the returns. I have paid that amount and it is a tax. I have paid it as tax. Now, once I have paid it as tax and I want to claim refund of it, then otherwise section 54 would lose all its meaning. In all cases where merits I have a strong case or some judgment is favoring me, I would say that, look, this is not now held to be not a tax at all. But according to me, that would not or cannot be the correct interpretation. So section 54 has to apply here.
I didn't catch that.
Some different factual scenario, and we taking a plea before the court that 54 does not apply, that is a different matter.
Correct, sir. Sir, also one more question which was there in respect of these joint development agreements where there is a landowner also. Can we say this is a profit in pendre, the joint development agreement which is entered?
Now, as I said again, this profit a pendre is yes. So yes or no answer? Yes, we can try that proposition. There is nothing which is stopping us from trying that proposition. But as I said, ordinarily profit a pendre is understood as something which is naturally growing on land. This judgment does stretch it to building as well, that if we have constructed a building and we sell the land as well as building, then that would also constitute a contract of profit a pendre. So if we are able to establish that this is only a right in land, then and we have added something onto the land. So as I said, it is profit a pendre is slightly different from mere right in land. We need to be getting something which is part of the land, which is apart from land. So if that is the thing that it is being developed, and that entire the developed land is then transferred, as is generally the case in the case of a development agreement, then this argument of profit a pendre can be taken on the basis of this judgment.
Sir, also in service tax, we have commonly seen this aspect of call book. They keep the orders pending when there is a matter which is like in development rights or the units which are given free of cost to the landowner. Most of the matters here in Maharashtra have been kept on call book and they will decide based on Supreme Court decision. Similar thing, can it be done in GST, or because of the 73-74 time limit, they will have to compulsorily go through orders?
No, there is no question. In service tax, because there was no time limit for passing of order, the time limit was only there for issuance of show cause notice. So this procedure of call book was there. In fact, that is also held to be illegal by many high courts. The issue is pending before the Supreme Court. But that apart, there is no question of there being a call book for GST, because once there is a time limit for passing of order, then one way or the other they have to pass an order. They cannot keep it pending. The moment they keep it pending, then it becomes time barred and they cannot do anything further in the matter. So unless there is a stay, that is a different. If suppose there is a stay of that very notice, not a general stay, not stay of operation of this judgment, but suppose a show cause notice is issued and that notice itself is stayed by a court, then for administrative purpose, if you keep it pending, that is all right, because that period is excluded while calculating limitation. But if there is no stay against that very notice, then that has to culminate into an order within that stipulated statutory time period.
Naresh sir, Rajiv sir, if you want to add something, the questions I have taken up, summarize most of it.
Yeah,
Or
yeah.
else you can-
I have, sir, I can ask one small issue on this. Yeah,
Yes,
hello. Yeah. Sir, you have, one thing is that typically we have seen the agreement in Maharashtra when MIDC is giving a lease, and later on the lessee transfer the lease. They call it as assignment in favor of a new lessee for the balance period. Generally, what happened is MIDC charges the transfer fee on that they are collecting and paying GST. That's a part. And lessee charge amount which they call it as a premium for transferring. Now, basically, there is no concept of sublease, because if lessor has not permitted the lessee to give sublease, there cannot be sublease only. This is a purely an assignment. Actually speaking, surrender the right in favor of the lessor, and ultimately lessor is giving to the new lessee. So we call it as assignment in this case. So the amount which is being charged or recovered by the seller may be under the garb or name of premium. That will be absolutely on a different footing, because he is not giving sublease, neither is giving lease, and he is not competent to give or lease or sublease. Then how far this decision will applicable to that transaction?
that will squarely be applicable. Calling it premium does not matter. Whatever name you call that consideration. So sublease, I was not, even in Gujarat also GIDC, there is no concept of sublease. So I was
Yeah.
not that particular fact. fact of GIDC, because this judgment will not restrict itself only to GIDC cases. There can be general leasehold lands where there is. So in fact, there have been queries received after this judgment, even in such cases, that what if we have sublet a particular land? It is general land owned by someone, leased, say owned by A, leased to B, sublet to C. Whether B2C transaction is taxable or not. So in that context, I was stating that it would not apply to sublease. In your case, in MIDC, whatever name you call that consideration, that is irrelevant. The fact is that it is not sublease. It is transfer of the leasehold rights by one party to another party, and therefore it would not be taxable as per this assessment. Another clarification I wanted to make, I just missed that this recent Bombay High Court judgment on this, I just went through that in the case of Panacea, but there the problem is that Bombay High Court has not followed or approved this judgment. In fact, the contention raised in that case was that this issue was not taken into or reply was not taken into consideration by the authority while adjudicating the show cause notice. Therefore, High Court has simplicity remanded the matter. At that time, the advocate pointed out that Gujarat High Court has already passed this judgment. So Bombay High Court simply said that you consider that judgment. So as of today, Bombay High Court cannot be said to have even followed Gujarat High Court judgment. It is only a matter of remand, which is applicable only to that particular case. So that was one clarification I wanted to make.
Thank you. That's all, Keval, from my side, sir. Naresh bhai, you have anything?
No, nothing. I think, Uchit Bhai has taken almost all the questions which would arise in mind of everybody, and our participants have asked the questions, which I think covers entire gamut of this particular issue. Yeah, I'm good with this. Yeah.
Uchit bhai, you can now take up with the Bharati Airtel.
Okay, sure. So now we come to the second judgment, which is in the case of Bharati Airtel. Now, as we will know that this judgment as such is in the context of the earlier regime of service tax and central excise and SENVAT credit. However, according to me, it will have direct applicability even for the purpose of GST. Now, here the issue involved was whether the mobile companies are entitled to SENVAT credit on the duty paid on the parts of telecommunication towers. Bombay High Court took a view that the mobile towers are immovable property, and therefore the SENVAT credit is not to be admissible. Delhi High Court took a contrary view and said that mobile towers are movable property, and therefore the mobile companies are entitled to input tax rate. Both these matters, they travel to the Supreme Court. Again, before the Supreme Court, all other issues were, no other issue was raised by the department barring this contention that the telecommunication towers are immovable property, and therefore the eligibility condition for SENVAT credit, that it should be used, the parts should not constitute an immovable property, that is not satisfied, and therefore the department said that SENVAT credit would not be admissible. Now, the judgment is very interesting because although there have been earlier judgments also on this question of movable versus immovable property. However, here, according to me, it was a more objective analysis of the issue. That is one. Second, according to me, the judgment has broadened the scope of saying that a particular property is a movable property. According to me, earlier it was in a slightly narrower scope. Here, now it has been broadened. Now, before I go to how that has been done, what the Supreme Court has essentially done in this case is that immovable property definition under the General Clauses Act and the Transfer of Property Act has been considered. Further, the definition of the phrase attached to earth, that has also been referred to. After referring to all this, the Supreme Court has laid down 6 parameters for determining whether something is to be treated as immovable property or not. Nature of annexation, the object of annexation, intendment of parties, functionality test, permanency test, and marketability test. Now here, pausing here, we need to understand nature of annexation and object of annexation. So when we are purchasing something and affixing it, suppose we are purchasing machinery and affixing it to the earth. First is how it is affixed, whether it is strong, so strong affixation that it becomes part of the building or the land, or it can be easily removed. That is one. Second, what is the object? Whether the object is to keep it permanently there, or the object is that suppose it has a definite determined life, then after that life is over of that particular machine or object, then we would dispose it of. Or suppose third, we have various sites or various factories at different places, and we also have the object of using that particular object at other places as well. So nature of annexation, object of annexation, intendment of parties. Again, that is correlatable to the object. What is the intendment of the parties? The functionality test, whether the affixation is to ensure that that particular object functions appropriately or not, or by its very nature, it needs to be permanently affixed to the earth. Permanency, again, permanency is something similar to object, whether it is going to be permanently there or it is going to be removed. And marketability test. So these 6 tests or parameters were specifically laid down by the Supreme Court. Now, as I indicated, why according to me, the scope of saying that a particular property is a movable property has been widened. According to me, earlier the proposition was that if it can be easily removed, then that property is a movable property. So suppose the affixation is only by the nuts and bolts, nothing further. There was a case before Supreme Court in the case of Triveni Engineering, where the argument by the SSE was that, look, this is only to ensure that the machine does not wobble. So to ensure wobble-free operation, we have simply tied that machine with the ground using nuts and bolts. Supreme Court said, yes, it is only temporary affixation, and therefore this cannot mean that this is an immovable property. In this case, we all know we have seen mobile towers everywhere. Mobile towers are not simpliciter affixed by nuts and bolts. Mobile towers are essentially towers which are fixed on the earth. So it is proper civil structure. On that civil structure, the towers are placed. So it is a much more stronger affixation of the tower. What was noted by the Supreme Court was that if you dismantle the tower, then there would be damage. So it is not as if we can simpliciter just remove the screw and you can take the tower as it is. They said that there could be damage. However, the damage would be restricted to the site of the tower, not to the tower itself. So this is something which needs to be kept in mind. And I'll again, we will again go to how this applies to GST. But we need to keep this in mind that what the Supreme Court said was that if by dismantling that particular tower, damage is caused only to the surrounding site or the other cables, etc., which are there, and not to the tower itself, and the tower by itself continues to remain mobile as well as marketable, then the Supreme Court said that this does not mean that it has become an immovable property, and therefore it was held that the Senwide credit is admissible. The telecommunication tower is a movable property. Now this is according to me what is most important, and we will need to analyze this in detail. particularly in the context of what has happened in safari retreats, the subsequent development, the proposal which is made by the council, which is likely to be taken up soon by the parliament, and how this judgment can help us in slightly watering down the restriction which is imposed by 17.5 C and D. Now, now let us first start by seeing what 17.5 C and D are. 17.5 C is essentially saying that you will not be entitled to input tax credit in respect of any sort of works contract services which are used for construction of immovable property other than plant and machinery, unless you yourself are a works contractor. In the sense that if suppose you are a subcontractor and you further supply to another contractor, you are paying output tax, that is a different matter. Otherwise, 17.5 C says that in case of normal works contract service, you are not entitled to input tax credit. 17.5 D says that if you use goods or services on your own account for the construction of immovable property other than plant and machinery, then again you are not entitled to input tax credit. Now pausing here, according to me, 17.5 C and 17.5 D are only meant to take care of two separate situations. 5C, when I get the building constructed through someone else, through a contractor. 17.5 D, when I myself construct the building using goods and services. According to me, apart from this plant and machinery and plant or machinery controversy which has been raked up by safari retreats, the basic flaw in the judgment is that Supreme Court says that when 17.5 D says on his own account, that means that on his own account would mean that the building is not going to be sold by him. It is going to be used by him for his own purpose. So on his own account, whereas in law, according to me, it is intended to mean construction by me and not through someone else, is interpreted by the Supreme Court to mean that the use of the building is going to be for not for myself but for someone else. So by this sort of a reasoning, Supreme Court has said that therefore 17.5 C and D are different, and this is again sought to be buttressed by this difference between and or, to take to draw a conclusion that while 17.5 C, the restriction will apply to all sorts of buildings irrespective of the nature of building, considering the definition of plant and machinery. In D, because it is plant or machinery, this restriction will not, the restriction of input tax credit in respect of buildings will not apply to D. Thereafter, Supreme Court in safari retreats has given example after example of buildings which would qualify as a plant. Again, very surprisingly, it has made an off-the-cuff observation that movie theaters and hotels will not be cannot be considered as building. So, according to me, it is the entire reasoning of the Supreme Court in safari retreats is very questionable. Secondly, as I said, they have not given relief to C. They have only given relief to 17.5 D. Now, practically most of these buildings, they get constructed through contractors only. So what is the practical relief that an SSC would get? That again was a question mark. And now to remove everything, it is proposed by the council that in 17.5 D also, plant and the plant or machinery is to be replaced by the phrase plant and machinery. Therefore, you forget about everything if the asset in question is in the nature of land, building or civil structure, then you will not be entitled to input tax credit. That is what has been proposed by the council, and according to me that is likely to go through the parliament, and we are likely to get that law soon. Now with this in mind, so by whatever way of reasoning, safari retreats had given some sort of a hope to many SSEs, consultants, that at least partially they would be entitled to input tax credit in respect of even civil structures. But given this amendment which is likely to be made, according to me, that judgment that would not survive, because once the basis of the judgment itself is removed by the parliament, then it is settled law that thereafter the judgment cannot apply, particularly if it is made with retrospective effect. Now I foresee that after this retrospective amendment is made, people will rush to court, challenge the retrospective amendment on the ground that it is taking away a right which was already granted, etc., etc. But according to me, again, that is a difficult proposition. If you look at the decision of Safari Retreats, that itself says that while although originally in the GST model code, etc., this phrase and was only there, but it was only a typographical error. The Supreme Court said that if had it been so, it would have been corrected till now by the parliament. Because it is not corrected, therefore we presume that it is not a typographical error. But after it is corrected or changed by the parliament, and it is done retrospectively, to say that it cannot be done retrospectively, that itself may be a difficult proposition. But be that as it may, that is for some another day. Here the moot point is that let us now take a situation where Safari Retreat no longer applies, and that the proposal which is made by the council has come into the statute book, and plant or machinery is replaced by plant and machinery. As a result of this judgment, in the case of Bharati Airtel, according to me, there will be a greater scope for claiming input tax credit, at least in respect of things which are getting attached to the land or building. Because 17.5C and 17.5D can apply only if what is being resulted into is immovable property. So forget going into the definition of plant and machinery at all. 17.5C and 17.5D can apply only if the resultant thing which is coming into existence by using those goods or services is an immovable property. If it is not an immovable property, then the restriction of 17.5CD does not apply, and therefore we should be entitled to input tax credit. Now, there used to be queries raised earlier regarding commodities such as, say, pre-engineered buildings. Those are now in vogue. Many of the factories, they use pre-engineered buildings. The buildings are made somewhere else. They are shifted to the factory premises and they are just affixed there. So if prefabricated or pre-engineered buildings are there, if suppose they can be taken somewhere else, even though there may be damage to the site, suppose a foundation is laid and on that foundation that pre-engineered prefabricated building or a shed is placed, although the foundation may have to be destroyed or would have to be damaged for the purpose of taking that prefabricated building to some other place. But if there is no damage to that particular prefabricated building and it remains mobile and marketable, then that would be a movable property. If it is a movable property, then the restriction of 17.5C and D will not apply. Next, this is a slightly uncommon example, but a more common example would be an elevator or say an air conditioner, because I have seen cases here in Gujarat where even the air conditioning plants or the elevators, the credit is sought to be disallowed on the ground that they have become part of the immovable property, part of the building. Therefore, by virtue of 17(5)(c) and D, you cannot claim input tax credit in respect of these elevators or these air conditioners. According to me, although even before this judgment, the law was the same. It is not as if the judgment has changed the law. According to me, it has only broadened the scope of saying that it is movable. But so suppose it is an elevator, although again elevator does become affixed to the building in that sense. However, it can be taken out. If it can be taken out with limited damage to the site, but no damage to the elevator, then it would be a movable property. Same thing with an air conditioning plant. If it can be taken out, then it would be a movable property, not an immovable property. And the moment it is only only a movable property, then the restriction of 17(5)(c) or D will not arise. So according to me, insofar as the GST law is concerned, the scope of this judgment is to the applicability of 17(5)(c) and D, and whether input tax credit can be claimed or not. Another aspect, if we look at whether it can have an effect on my outward tax or not. As I have already indicated while discussing the first judgment, now while entry 5 of schedule 3 says that sale of land is not to be considered as a supply of goods or services. Suppose we sell this prefabricated building and we take a plea that we are not liable to pay any tax on this transaction because it is only sale of immovable property. There, the department can use this judgment to say that, look, this is not immovable property which you are selling. This is a movable property, and therefore kindly pay up the GST on this transaction. So the other side of the coin also needs to be taken care of. Wherever we do not pay tax on a particular transaction, considering that it is only a sale of immovable property and therefore it would not attract GST, we need to be careful what we mean by the phrase immovable property, which has been decided by the Supreme Court in detail. It has been dealt with in detail by the Supreme Court in the context of the mobile towers. Basically, according to me, while this judgment will have direct applicability to GST, it will again depend, or the applicability will to a great extent depend on the facts of each case. So we will need to be careful whenever we are either claiming input tax credit or not paying outward liability on the ground of movable, immovable. We will need to be careful about the documentation part, because in the earlier slide, I had shown the 6 parameters which the Supreme Court laid down to hold that it is a movable property. So suppose we are say buying a prefabricated building and we are claiming input tax credit, we need to ensure that when we claim that input tax credit, we in our books of accounts as well as in our records document the fact that this is a movable property. It can be in the form of a chartered engineer certificate, certificate of an expert. So whenever it is being installed, we can have photographs, etc. of the installation process. So that if suppose in audit or at the stage of adjudication, any query is raised, we are able to establish as a matter of fact that it is a movable property. Because what we have experienced, at least at the stage of tribunals and high court, is that at the stage of adjudication, what is done is an answer is given on the legal aspect of the matter, which is fine, which is required to be given. But more emphasis at the adjudication level needs to be on establishment of facts. Because the moment we are able to give a strong reply on facts, and the authority is not able to deal with that reply, and if suppose the authority passes an order without taking into consideration or without properly dealing with the reply, to that extent, immediately our case before the tribunal or before the High Court becomes stronger. So particularly in cases such as these, where the factual aspect is of paramount importance, there is no dispute on law. Law is very clear that if it is resulting in construction of immovable property, you cannot claim the input tax credit. If it is movable property, you can claim input tax credit. There is no problem insofar as the law is concerned. The problem is on facts. So the moment there is a problem on facts, whenever there is such a transaction where two views can be possible, we need to take precautions at the stage of recording of the transaction itself. We need not even wait for the audit or the adjudication. The earlier we have obtained this certificate, the better it is for our case. In any case, if suppose the query is raised in audit or a notice or adjudication is received, then these facts need to be pleaded as well as supported by necessary evidences corroborating what we are saying before the authority, and they need to be placed on record. The moment we do this, we ensure that if we are required to travel further for contesting this issue, then at least at no stage someone can raise a finger at us that what were you doing, why did you not produce evidence in support of what you are saying. So this is something which we need as practitioners before the department. This is something which we need to keep in mind, and particularly in the context of this judgment, that wherever we are buying something which is on which is a sort of a borderline commodity where we are not sure whether it is movable and or immovable, but we want to claim input tax credit on the ground that it is movable, then we keep some sort of documentation, certification, etc. ready, so that if at all any query is raised at any particular stage, then we have enough scope for argument. This also helps when it is a question of invocation of larger period of limitation. Wherever there is invocation of larger period of limitation, if you are able to show that, look, at that point of time, we had enough documentation to prove that we are entitled to input tax credit, we have taken an opinion, we have taken certificates, and therefore we have claimed credit. Now, if you want to raise a demand, and if you have skipped the normal period of limitation, then you will not be able to raise a demand, will be a very, very strong point. So even from this aspect of the extended period of limitation, penalty, everything, this sort of documentation will always help, and it needs to be kept in mind. So with this, I think Rajiv ji, we can take a look at the questions on the second issue.
Yeah, thank you. Keval, you can take it forward.
Sure.
Any
So the
questions?
first question which I want to just talk about this retrospective amendment of Safari Retreat, which you highlighted, sir. The Supreme Court has done a thorough analysis on the fact that there was no error in drafting. It was a conscious decision. And in fact, this amendment and the council meeting highlights that there was an error, and even after that, they have done this retrospective. So to that extent, will the ITC, let's take an example, I had already claimed the ITC and now there is a retrospective amendment. So how far good is my case to argue that on retrospectivity?
See, whenever a retrospective amendment is made, it is always likely to be challenged before the court, saying that, look, this is taking away something which was already given to me, so you cannot do this. Now, the law with respect to retrospective amendments is now well settled. Supreme Court in multiple cases has said that Parliament has the power to make a retrospective amendment. So you cannot say that Parliament cannot. Retrospective amendment can be challenged only on the ground that it is absolutely manifestly arbitrary, discriminatory, etc., and therefore violating Article 14 of the Constitution. Now, even there, the general trend of the Supreme Court has been to uphold the amendments unless something absolutely abnormal is brought to its notice. One case which can support us is in the case of the judgment in the case of Jayam and Company. This was a case under the State VAT Act, where the controversy was that originally the provision of input tax credit said that you would be entitled to input tax credit even if the purchase price is higher than the sale price. Thereafter, the legislature amended the law and restricted the input tax credit only to the extent of the output tax liability. That amendment came to be challenged before the court. Ultimately, Supreme Court said that prospectively, yes, retrospectively, because the input tax credit was already granted on the basis of the earlier law, therefore, retrospectively, we will not permit you to take back the input tax credit. So, if suppose a retrospective amendment is made and we proceed to challenge it, that has to be our first first ground of challenge, that look, that credit was already granted. It is again, there are decisions to the effect Eicher Motors, Daiichi Karkare, and the long list of judgments taking a view that once a credit is granted, it becomes a right in favor of the SSE. It is a vested right in favor of the SSE, and therefore that cannot be taken back ordinarily without any valid reason. In fact, Gujarat High Court in the case of Philco Trade Center also took the same view, where the section 140 said that if the goods are dating back to more than a year, then that SENVAT credit you cannot transition to GST, that would lapse. Again, Gujarat High Court said that this is a form of retrospective amendment only. It is the embargo is applying retrospectively. Earlier there was no such embargo. Now you are applying it retrospectively, which we will not permit. So yes, there are lines or line of decisions taking a view that particularly in the context of input tax credit, that the input tax credit cannot be retrospectively taken away. However, in this particular case, the problem is that the department is likely to argue that it was not as if the position was clear, it was ambiguous. The moment it is concluded that it is ambiguous, and to remove the ambiguity, the legislature has decided in its wisdom to retrospectively clarify and amend the law. That would be something which will be against us. And coupled with this, that, as I said, the very basis of the judgment itself was questionable. It is not as if the provisions were absolutely clear, and therefore with no uncertain terms, the Supreme Court took a view that this credit is available. It was very wishy-washy. I mean, the reasoning, the conclusion, ultimately it remanded to the High Court for determining on facts. And so, this C and D, I still have not been able to understand how this distinction of C and D was made. So the judgment by itself was a lot of question marks were there. Now, if the legislature steps in and removes these question marks and gives a definitive answer, that would be their contention before the court, that we have only clarified what we wanted to initially say, and therefore please uphold. But I'm not saying so. Obviously, the moment retrospective amendment is made, there will be a flood of petitions. That is bound to be there. But this is not a very, very clear case in that sense. Even there, we will be facing challenges.
So there is one question on civil foundation which is constructed to keep the plant and machinery, whether that will be treated as immovable.
No, so there I believe in the definition of plant and machinery itself, which is given in explanation to section 17, it is clarified that land. So if you look at the definition, it specifically includes anything which is there to support the plant and machinery, and it excludes land building and civil structures. So here, in fact, in Gujarat, there have been cases where even though this inclusive portion is there, they have relied on the exclusion to say that, look, in any case, civil structure is excluded, so we cannot grant. But according to me, the correct legal position is that the moment there is a specific inclusion that ought to be included in the definition of plant and machinery, the exclusion, when we look at that first clause. It is land, building, and any other civil structures. So the principle of nocitero sources would apply. Civil structures has to be interpreted in light of the earlier words of land, building. The ejusdem generis, nocitero sources, all that will apply, and therefore if it is a civil structure in the nature of land and building, that will be excluded. If it is only mere a support to the plant and machinery, then that would be covered by the inclusive portion of the definition of land. So according to that there cannot be a doubt. But even there, again, practical problem we have been facing is that how do you prove this? So there the documentation is necessary, some sort of a certificate from chartered engineer, etc. is necessary that this material has gone into foundation of, because ordinarily it would be general bulk purchase of material which would be used for building as well as foundation. That segregation needs to be supported by evidence. But if that is there, then according to me, input tax rate should be available.
Sir, one question is on this 17.5D. It uses the term for construction of an immovable property. Now, how elaborate we need to read that? So one of the example that they've given is, let's say I take a loan for constructing, raising money to construct the building. Whether the processing fee on that will also get covered in this 17.5D or not?
No, according to me, all that is too far-fetched. It should not get covered for construction of immovable property. What I believe, when they enacted also, their purpose was only to ensure that the building material or the specific services which are used for constructing the building, only that is to be debarred. Because again, that has a history. Even if you look at the earlier law, most of the VAT laws had this restriction. Under the central sales tax also, if you wanted to purchase building material, you could not purchase against C-form declaration. So earlier history also suggests that they want to restrict the admissibility of any sort of a benefit to building material and building construction services which are directly used for construction. We cannot go to further services which are generally used for business, but they are in some sense linked to construction. So that loan, etc., the same principle I said for leasehold rights, that would apply for the loans also. I get the loan, and using that money I construct the building. That does not mean that that service is for construction of building. The loan I get is for the purpose of my business. Now in the course of business, that building is being constructed, that is not the test. Test is whether that the goods or services are directly being used for constructing the building. Or
the last question that we have in the chat box, can we argue that building is treated as an apparatus to generate the taxable supply? So somewhere similar to what the Karnataka power decision, which was relied in Safari Retreat. Can we say this entire building is an apparatus and effectively covered by the definition of plant and machinery? So the amendment effectively does not make a difference.
that will be a very difficult proposition for the very simple reason that otherwise this very exclusion of building will become redundant. So to say that even though there is a specific exclusion for building, still, because it is not as if it is given somewhere else in the very same definition where the plant and machinery is defined to mean an apparatus. So it is acknowledged by the legislature that yes, building is also an apparatus, but still it excludes land, building, and civil structures. So building, civil structures, though an apparatus used to do business, still gets specifically excluded by virtue of a statutory provision. And therefore, according to me, any argument can be made, but eventually it is not likely to survive when it gets decided.
Rajiv sir, over to you. I have done with the questions.
I think, Keval, you dealt with all the questions, and we are absolutely at 7:27. So it's almost on time we have. Uchit sir, it was a fantastic analysis, and not only you dealt with, but the participants have raised various issues which are very well responded by you. Once again, thanks from my personal side. On behalf of Chamber, I'll now request our convener Umang to give a formal vote of thanks to the faculty of the day. Over to you,
Yes,
Umang.
thank you, sir. So I'm sure everyone will agree that sir has expertly analyzed both the judgments and have given us a lot of insight on the basis of the arguments which are made and the thought process of both the honorable courts. So on behalf of the Chamber of Tax Consultants and the Indirect Tax Committee, we express our deep felt gratitude for sharing your knowledge and enlightening us on the subject. Again, we would like to thank you for accepting our invitation so promptly and taking time out from your busy schedule. So thank you, sir.
Thank you.
Request everyone to
And I request everyone to carry a virtual round of applause.
Thank you. Uchit sir, only thing is we would love you to be on our platform time and again as and when we request, subject to your availability, for the benefit of all the participants. Sharing knowledge, we will definitely, your words of wisdom will help to all of us, sir.
It was a complete pleasure, and sure, I mean, it would be a pleasure to again be on your.
Thank you very much.
Small thing. So I like to thank the participants as well, and a small announcement. We have our indirect tax study circle meeting tomorrow on the analysis and discussions with respect to the waiver scheme under 128A and the regularization of ITC under section 16.5 and 16.6. The group leader is CA Uchit Agarwal and the chairman is Advocate Harsha. The timings are 5 to 7. So everyone who's not registered for the study circle may please register themselves, and the study circle members would have received the link on their email ID. So thank you.
Yeah, before we close, Uchit sir, only thing is there are requests from couple of participants on the chat box. It is your prerogative. The presentation which you have displayed, if you want to share it, it is your choice. Then chamber would love to circulate. You can text it and mail it to me, and we will circulate. It is your choice, sir. Your display.
No, absolutely. I mean, it is. I will immediately share it. I have no problem.
Yeah. So thank you, sir, for your kind gesture. Umang, sir will send it to me or to chamber. Ensure
get
that
it.
you send it to all the participants.
Yes.
Thank you very much, sir. Shall we sign off?
Yes, sir. I think we can.
Thank you, Uchit.
Yeah. Thank you, everybody.
Yeah,
Thank you very much.
Thank you, sir. Thank you.